SoFi stock has had a very choppy week, down 5% after hitting a new 52-week high. But the stock is up over 240% in the past year, and this run could continue a lot longer yet. So in today's video, I will be looking at the latest news. I'll look at why big analyst revisions could be ahead for SoFi, the possible effect rate cuts later this month, and I'll discuss the possibility of SoFi being added to the S&P 500 and when this will happen. If you're invested in SoFi, you will want to see this, so stick around until the end of the video because patience is the key. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Just yesterday, SoFi announced a multi-year partnership with 2024 NFL MVP and Buffalo Bills quarterback Josh Allen. Now this is yet another huge marketing push from SoFi, and their chief marketing officer, Lauren Strafford-Webb, stated that we're excited to team up with MVP Josh Allen to shine a light on the MVP for your money, SoFi Plus. Just as Josh is raising the standard on the field, SoFi is raising the standard for what financial memberships could deliver. With SoFi Plus, we're helping members get their money right with best-in-class products, rewards, and guidance to achieve their biggest ambitions. The generational quarterback and the future of finance will come together at the start of the NFL season in a campaign that will air across all major streaming platforms and national cable networks, including NBC, ESPN, Amazon Prime Video, and YouTube. So this is another serious marketing push from SoFi, where they already have multi-year partnerships with the likes of the NBA and All-Star Jason Tatum, or TGL Golf with Tiger Woods and Rory McIlroy. SoFi also announced this week the availability of a new ETF fund with the SoFi Agentic AI ETF, ticker symbol AGIQ. Will invest in US companies included in the Beta US Agentic AI Select Index, which is designed to track businesses involved in developing, providing, or utilizing AI technologies. The index currently includes companies such as Salesforce, Tesla, and Nvidia. In addition to AGIQ, SoFi Invest currently sponsors other ETFs advised by Tidal Investments, such as the SoFi Select 500, SoFi Next 500 ETF, Social 50 ETF, or the Enhanced Yield ETF. So there's been a lot of talk recently about SoFi possibly being added to the S&P 500, and for a large part, a lot of this looks like hopium with no real foundation as to why SoFi should be added to the S&P, other than the fact that the stock has been rising so much over the past year. But a lot of people seem to have missed some key indications and signs of progress that might be bigger than people realize. First of all, last month, SoFi got added to the MSCI ACWI Equity Index. This is the all-world index, and SoFi was one of the 3 largest companies by market cap to be added to the developed market index alongside Rocket Labs and Affirm Holdings. Then it was announced last week that SoFi will also be added to the Bloomberg 500 when the index performs its semi-annual rebalancing next week on September 11th. And we can see here that list of additions, with Affirm Holdings and Rocket Labs also joining. Now, each of these announcements are quite small in comparisons to be adding to the S&P 500, which would actually be a huge deal for SoFi. And SoFi does in fact meet all the criteria to be added to the index. SoFi's market cap is now about $29 billion, while the minimum requirement for the S&P 500 at the moment is about 22 or 23. But despite this, I don't see SoFi being added to the index this year. SoFi has been on a huge run this year and is currently up about 240%, which is amazing. But it also means that as little as 3 or 4 months ago, SoFi wouldn't have even been eligible for S&P 500 in the first place, while today's price sees SoFi sitting around $24. Now, if we think back to last year, Palantir Technologies got added to the S&P 500 last September, when the stock was only $35, and this played a part in the stock's amazing rally over the past 12 months, going as high as $190 last month. But it's worth remembering that Palantir was valued at close to $80 billion at the time. While its share price was only about $10 more than SoFi's today, the company valuation was far above the minimum requirements. And at the same time, Dell Technologies was added too. Again, Dell's market cap was close to $80 billion at the time. Now, although I don't see SoFi joining the index at the next rebalancing, should the share price continue to keep going up, as it has been doing for the past year, then I believe that there will be a very strong argument for its inclusion next year. And when we look at the latest investors presentation, and we see how the company has been growing quarter after quarter, year after year, the record adjusted EPS of 8 cents is the 7th straight quarter of profitability now, while total deposits grew $2.3 billion to nearly $30 billion, and the company recorded GAAP net income of $97 million. New members grew by 846,000, up to the record of 11.74 million, and new products grew 1.26 million up to 17.142 million. These are compound annual growth rates of 51% and 53% respectively of members and products. And SoFi have proven their durable growth, with the adjusted net revenue, EBITDA, and net income all far exceeding previous years, and we can see that they are on a huge upward trend that is showing no signs of slowing down. Financial services has driven a 2x net revenue growth on the year while nearly doubling the contribution margin. SoFi continues to drive strong originations across all loan types, with personal loans, student loans, and home loans all increasing year over year. When it comes to full year 2025 guidance, SoFi have once again revised their guidance upwards, and they have revised this up to 3.375. EBITDA of between 875 and 895 has been revised upwards to 960, while the net income has been revised up to 370. Guidance for EPS in a range of 27 to 28 cents has now been revised up to 31 cents. So overall, it's been an incredible quarter for SoFi yet again. Then if it continues, I feel it's very likely to see SoFi added in 2026. Now, this is just my opinion, but from looking at the data, I really can't see any reason against it. Last year, I was one of the only people here talking up Palantir to join the S&P in September 24. I had been talking about it for a couple of months and got a load of comments telling me that I was delusional. Yet I couldn't see any reason why Palantir would be left out, and today Palantir is one of the biggest companies on the index, up there with Bank of America and above staples like Coca-Cola or Chevron. Looking at MarketBeat, we can see that SoFi stock continues to divide opinion, with a consensus price target from 21 Wall Street analysts of just $19. While the high price target is 28 and a low forecast of 12, the stock has 3 sell ratings, 11 hold ratings, and 7 buy ratings. But interestingly, 2 of the highest targets have been set in the past year were both the most recent. JP Morgan boosting their target up to $24 and Citigroup boosting their target up to $28 last month. But big analyst revisions could be ahead for SoFi stock because SoFi has new fundamental tailwinds working in its favor, placing the current Wall Street analyst consensus under pressure. Investors need to monitor 2 main indicators of SoFi's exposure to mortgage financing. One is the mix between housing supply and building permits volume, both of which are reading at levels near the extremes of their respective cycles. In other words, supply is now at a cyclical high, while permits are at a low. A return to normal will mean a surge in new demand for real estate financing through mortgages, and SoFi is poised to capitalize on this trend to drive up its valuation. The second indicator here is down to the Fed adjusting interest rates. So September 17 is a key date. That's when the next Federal Reserve meeting will conclude, and with it, many experts now predict that the first interest rate reduction of 2025 will be issued. While multiple rate reductions were issued in the final months of 2024, the Fed rate remained frozen throughout 2025. But there's expected to change this month, with the chances of a rate reduction currently listed at more than 95%. And the effect of this will trickle down into lower mortgage rates, meaning that lower financing costs could be the spark that mortgage markets need to wake up, which is why SoFi stock is one of the names investors need to keep on their watch list for a potential breakout in the coming months. Now, it's been a very long road for SoFi to get to this valuation, and I see a lot of people now saying that SoFi has reached the top and there's not much more upside anymore. But SoFi's valuation is still just $29 billion, compared to the likes of JP Morgan, which is over $800 billion. SoFi is still small enough that years of consistent high-speed growth could make long-term investors very rich if they're patient enough. And just a last point I want to make here about patience. Looking here at Nvidia. Nvidia's growth was so slow for such a long time. From 2014 to 2017, it was barely 50%. And again, from 2017 to 2020, barely 50%. But then over the past couple of years, there has been exponential growth. It took years of patience to get to this point. And now you see all the posts online of people saying, I wish I bought Nvidia 5 or 6 years ago at $3 or 10 years ago at 50 cents. I'm sure there's people who bought in 2004 and by 2014 they were barely up 90%. But by 2025 they are up 400,000%. Now, I know this is off topic, but I just want to make that point about patience. And I'm not saying that SoFi is going to go up 400,000% either. I'm just making that point about patience. Because I can guarantee you that a lot of people laughed at anyone holding Nvidia stock who was saying that this will be a millionaire maker. And I feel sorry for all the people who lost patience with SoFi stock throughout 22, 23, and even 2024. Because they've completely missed out on a huge run for the stock of several 100%. So what do you think about this? Let me know your thoughts in the comments. Are you still bullish on SoFi stock, or are you one of the people that thinks it won't go much higher than today's price? There's always a lot of talk on social media about SoFi, but always do your own due diligence. Remember that I'm not a financial advisor. This is not financial advice, so always do your own research. Like and subscribe, and I'll catch you in the next video.